It certainly does. Welcome to the closing bell, everyone. I'm Wilfred Frost at the New York Stock Exchange. The major averages picking up where they left off in October with more records to start the new month. Gains have pared back during the session today, but small caps jumping as we head into the final hour of trade.
Welcome, everyone. I'm Sara Eisen. Let's look at what is driving the action right now. Senator Joe Manchin just throwing a wrench into Democrats' spending plan, saying he wants more clarity on the economic impact of the reconciliation bill before a vote. Tesla's off to the races once again, now at more than 50% just in the last month, pushing further above $1 trillion in market cap. And energy is the top performing sector right now after big gains in October. The group has now doubled in the past year. 59 minutes left to go in the session.
Coming up on the show today, the CEO of Lending Club joins us to discuss the loan industry, with his stock up more than 30% in the past week following blowout earnings. Plus, inside ARK's strategy, we'll speak with the firm's internet analyst about the companies he likes now, plus his thoughts on ARK holding Tesla and its blistering recent rally.
Let's begin the hour, though, with breaking news out of Washington on crypto regulation. Ylan Mui has more for us. Ylan.
Well, Sarah, the Biden administration is warning of a broad set of risks posed by stablecoins and calling for action from Congress. Now, the report from the president's working group on financial markets outlines several categories of risks, including loss of value and runs on stablecoins, payment system issues with settlement or liquidity, risks of scale and market power, and illicit finance and fraud. Now, the report says that a solution should really be coming from Congress. It says any legislation should require stablecoin issuers to be insured depository institutions and limit affiliation with commercial entities. It should also promote interoperability to limit economic concentration and impose standards on custodial wallets. But, of course, we know that bills take a long time to move on Capitol Hill. And in the interim, the report says that FSOC could designate certain stablecoin arrangements as systemically important, triggering new examination and enforcement measures. It also outlines the authority of agencies like the SEC to oversee digital asset offers, along with intermediaries and trading platforms. Now, the industry did get a chance to weigh in on this report, and a senior administration official told me that this is an attempt to provide the regulatory clarity that companies have been asking for. Guys.
And Ylan, we also wanted to ask about recent developments surrounding the spending bill from Senator Manchin in particular, of course.
Yes, of course. Democratic Senator Joe Manchin is saying now that he is not ready to support President Biden's social spending package, and he urged the House to move forward instead with a vote on the infrastructure bill ASAP. Now, there had been some momentum toward holding that vote possibly tomorrow, but unclear if that's going to happen now because progressives have threatened to tank that bill unless they have a guarantee that the bigger package can pass as well. But today, Manchin accused them of holding the bipartisan infrastructure bill hostage and said that's not going to work.
To be clear, I will not support the reconciliation legislation without knowing how the bill will impact our debt and our economy and our country. And we won't know that until we work through the text.
He said he's worried about inflation and what happens if the Fed starts tapering or raising rates. And he dismissed the smaller price tag of the bill as shell games and budget gimmicks, calling it a recipe for economic disaster. Guys, he said he's still open to supporting the bill eventually, but that's going to take some time. Back over to you.
Ylan Mui, thank you. For more, let's bring in Ed Mills, Washington policy analyst and managing director at Raymond James. So given these new comments from Senator Manchin, Ed, are you telling your investor clients to expect anything on both bills before the end of the year?
I think the timeline for the end of the year is absolutely still on. I think that the timeline for trying to get it this week was always wishful thinking. I think what you heard from Senator Manchin is that there are a number of steps to take before you can say that you are for or against this bill. We don't have full bill text that has been agreed to. We haven't had a score by the Congressional Budget Office and the Joint Committee on Taxation. We have not gone through what's known as the bird bath to see what stays and what comes out in the Senate. And in March, when they try to get a $1.9 trillion bill through, there were a couple of surprises that Manchin had to work to get out at the last minute. And so if you try to pull over a couple of things on him in March, he's not going to say yes until he sees all of that information coming out. And that's not something that can get done within the next 24 hours and probably not this week.
But President Biden last week came out and hailed, right before he went off to G20, hailed a victory a framework for a deal had been reached. So why does this feel like it keeps happening, and every time it does, we can't get there? It seems like a pretty sharply divided Democratic Party.
Yeah, so I think what you're seeing is there is a desire among Democrats to create false deadlines and a narrative of that this is moving forward. And every time we have a deadline, a little bit more of this gets done. The only real deadline is probably members of Congress wanting to go home for the December holidays, as well as the need to get the debt limit finally accomplished this year. They know that, but there is so much wood to chop here that they're trying to use each one of these actions, and it does feel like Groundhog Day. It does feel like false starts, but this is all done purposely by the White House, by Speaker Pelosi, by Manchin, by Schumer, trying to kind of incrementally inch along to see if they can get that deal struck, which still is much more likely than not, but we have to go through this process before everyone can say yes or no on the final package.
And if and when this does pass, is it net positive for Biden's approval ratings, or has it been so drawn out, and is it divisive enough as a big spending bill often can be, that it doesn't really improve them either way?
You know, I think, I think that is going to be a longer-term debate. I think that the debate I am focused on at Raymond James is what's the impact on the market. And I would say that if this gets done, I think this does set up for a positive year-end rally where the overall fiscal cliff that a lot of investors were concerned about mid this year is not going to happen. You see front-loaded fiscal stimulus here, as well as the tax hit, that potential draw from the economy is not going to be nearly as impactful as feared. So Biden, I think he can figure that out himself. But from a market perspective, I think this is setting up nicely, Will.
If you look at what Joe Manchin is worried about, the senator cites the impact on inflation. He cites budget gimmicks. Treasury Secretary Yellen last week told me that this is an anti-inflation bill that should actually boost supply for things like workers and put pressure on prices. Do you expect it to get scored that way? And could that be what gets us over the line here?
Yeah, Sarah, that's an important question. And I don't think we're going to have answers to all of Senator Manchin's questions. We are in an unprecedented fiscal experiment. We have spent trillions of dollars in ways that we have never done before. I think as you look at the bill itself, some of it is budget tricks. We wrote this in a report last week in terms of how you can get different budget tricks done. If you only fund a program for 2 years instead of 10 years, that only scores as 20% of the cost. But sometimes there's nothing more permanent than a temporary government program. So those are the things that he is trying to make sure those tricks don't get into a final deal. But I do think that the overall dollar amount is going to be much higher than whatever that score is. We're looking at SALT. It looks like it's more likely than not to get a 2-year relief there, paid for by fully having a SALT tax come back on in years 9 and 10 of this bill. So that's a legitimate debate to have. I don't know if we will have a conclusion to that debate before the end of this year when this likely does pass.
Ed, switching focus altogether, what's your latest expectation as to what the White House is thinking about possibly extending Jay Powell's term or not?
So time is running out. Jay Powell's term is ending in February, and there's not a lot of time that Congress is set to actually be in D.C. for that nomination and confirmation process. I think when they announce it, it's going to be a slate of who is the chair, who is the vice chair of supervision, and who fills that final governor spot that is still open on the Fed. My expectation is that Jay Powell does get nominated for the next term, and he will be able to adhere to some of the concerns of progressives by filling in Governor Brainerd into either that vice chair of supervision or that vice chair slot, as well as have another individual who would be very progressive in that final governor spot. The package is going to be what gets sold. In getting the confirmation done, Powell might be one of the only people who could get confirmed between now and February of next year when you look at the calendar. So I think time is on his side from that perspective.
Are there any contenders that would come as a surprise to you, to Wall Street?
I'm sure there are. I think that if it's not Powell, it looks like it would Brainerd. It could be Raphael Bostic, Roger Ferguson? Does Yellen get pulled back in? There's always a lot of options for this position. Anyone who's not Powell is going to be more dovish on monetary policy, going to be more hawkish on regulatory policy. So I think the debate for the market at that point is stagflation concerns. Are we going to have more inflation that Manchin kind of is concerned about at a time where we have more aggressive bank regulation? One thing that the Manchin letter with Schumer outlined is that the Fed has to start tapering before he votes for one of these bills. So if we do get the announcement tomorrow that the Fed tapers, that is yet one more area where Manchin got his way and would be adding pressure on Manchin to support a final package.
Yeah, Wednesday.
We're looking forward to that in particular on this show, of course, where we will hear from the Fed chair during closing.
He's our guest.
He's basically our guest, yeah. He schedules that and his predecessors to be on our show. Ed, thank you.
Thank you.
We have some breaking news on EV maker Rivian. Phil LeBeau.
Wilf, this is headlines that first flashed coming from the Wall Street Journal just a few minutes ago. We have confirmed independently from sources that Rivian is planning to finish its IPO. Remember, they filed for it on October 1st. It will happen likely next week. They are going to be NASDAQ listed. RIVN is the ticker symbol that they will have on the NASDAQ. The valuation is expected to be a little over $60 billion. That is the expected valuation, though that could obviously change as we get closer to the actual listing. Remember, Ford has a 12% stake in Rivian, and last week, Amazon came out and said, look, we think we've got a 20% stake in Rivian. That's our calculation, according to Amazon, a 20% stake in Rivian. At the time, they were valuing that stake at $3.8 billion. Clearly, that stake is going to be worth far more if this IPO comes in at a valuation north of $60 billion. Guys, back to you.
Phil, we will definitely keep eyes out on that one. Will be very interesting indeed. Phil LeBeau there. Up next, Moderna pulling back today, now down more than 30% from its peak on news of a delayed decision on COVID vaccines for adolescents. We'll bring you the details after this short break. You're watching Closing Bell on CNBC.
This CNBC program is sponsored by Truist Wealth, where meaningful relationships matter most.